Hey folks, Vic Noble here with your weekly trade video for the week ending Friday, September the 10th of 2021. This video is all about placing a stop loss, which is a critical part of a Forex trading plan. Okay, we've all heard the axiom, cut your losses short, let your profits run. Well, the stop loss is the cut your losses short part of it. Okay, the stop loss is how we keep our capital preserved against large losses. Stops are a balancing act. We don't want to stop too close or we're going to get stopped out prematurely, but at the same time, we don't want to put our stop too far away or we end up taking on more pip risk than we need to or than we want to. So I found the ideas presented here to be a very good way to place stops. Setting a stop loss is not only an essential part for trading, but it needs to be set in a proper logical place. There are several techniques that I found to be very effective in my years of experience, and I'm going to show those to you now in detail, and I hope you find them useful as well. And if you like this video, please hit the like button. I'd really appreciate that, and give it a thumbs up, and be sure to subscribe to our channel by clicking the subscribe button in the bottom right corner of the video. Okay, let's take a look now at the Forex stop loss. So listen, I've been trading now for about 40 years, and I was a futures broker for about 5.5 years. And while I was a futures broker, there were some clients who never used a stop loss. Okay, they said, let's just keep an eye on it, stuff like that, right? I never did know what keep an eye on it meant, right? And of course, that form of trade management almost always ended in disaster. The fact is, you will have losses. We all do. They're part of trading. So you better have a technique for getting out of a trade that's not working out. Okay, and obviously we have very strict rules about stops in the services that we have. The thing is this, you must know in advance where you're going to set the stop. And it should be, it shouldn't be just some arbitrary number or, nor should it be like a so-called mental stop. Okay, in my opinion, doing stuff like that is just a way to avoid being wrong, and it's not going to happen. So I'm going to go over a couple of different places that we use for stop placement or different techniques. And the reason why I'm going to show you a couple of different ways is because we do use a slightly different technique for scalping as opposed to longer term trading, and I'll show you why. So let me just first show you what a natural stop is. So on this pair right here, this is the British pound US dollar, and I'm recording this on the 9th of September 2021. And I'll just show you a setup from today, actually. And so if I want to buy right here, and in fact, let me just give you the top down on this. Why not? What the heck? So we were looking at this level. See, this level here came from back here, and we've been watching it because it's been a reactionary level. Like you can see how prices reacted around it quite a bit. Who knows what's going to happen when it hits it again? We just wait and see what price tells us. This daily candle right here with my cursor on it, that's a pin bar reversal. So that gets our attention right off the bat. We've had our advanced market flow is up. Don't worry about what all that is. I'm just telling you that my bias is more on the long side. So coming in today, into today, that's not easy to say. We're looking at this, and we're looking at the 4-hour chart, and we're going, boy, that's been a pretty good level. In fact, it actually hit this lower level on the 4-hour chart and had this pin bar reversal. So we're really watching this. And then on a 15-minute, which is our entry time frame, we're thinking, okay, this would be a nice place to buy when it comes back to retest this level of support from the daily chart. Well, a natural stop is right here. A natural stop is basically a high or a low swing point that was established by the market. Okay, not by us or artificially or anything. It's a known point of reaction created by the market participants. Nothing artificial about it or anything. It's not a number that we made up. It's right here. Okay, you can, as soon as price goes up, we know this is a reaction level. That's a swing low. Okay, so that's a place that you could put a stop. That's called a natural stop. The other stop that we use is called a volatility stop. And what we do is we take 15% of the 5-day average daily range, or the average true range. It's basically the same thing in the Forex. And we use this for scalping when we're at a great level, but the natural stop is too far away. Because for scalping, we only want to take on trades with very small initial pip risk. We're talking about maybe 10 to 20, 25 pips maybe when things get more volatile on a pair. And that's the point. The volatility stop changes with the changes in the average daily range. Okay, as the average daily range goes up, gets bigger, the amount of volatility stop goes up. You'll be risking more pips as the volatility gets more, and vice versa when the ADRs decrease, the average daily ranges decrease. I've used this for many, many years and found it to be, very effective. And there are times when the volatility stop is also a natural stop, and that's the best of both worlds. Okay, so let's have a look at this pair, the British pound US dollar, and take a look what happened. Price comes down to here. The volatility stop coming in today was just 11 pips. If I buy it here, I can risk just 11 pips. If I use this natural stop, now I'm looking at like 30 pips, almost 3 times as much. Look what happened. What a nice move up that was. Obviously a big winning trade, great, and hit this opposing daily level for about 50 pips, almost a 5-to-1 reward risk using the volatility stop versus not even a 2-to-1 using the if you'd use this natural stop down here. Okay, now obviously, please don't think they all work out like this. They don't. I wish they did. It doesn't matter. You can imagine when you get trades like this, you can stand some little losses. Okay, and you can also get stopped out on this volatility stop, and then it goes up, and you wouldn't have been stopped out on the natural stop, and blah blah blah. Listen, pick your poison. We use this; it works well, and that's it. I mean, there's always exceptions to everything, right? But I hope you get the point here. And now, I'll show you. I'm going to show you actually one more trade from today on the euro yen pair. I believe it was right here. And if we do our top down on this, what happened here is that on the daily chart, we had this level marked right here. We're just watching it because it was a very, very good reaction to the downside. Price never got established above it, and it held and held, and we're just watching it to see if anything happens around it that would get our attention. Negative candle on the 8th. Coming into the 9th, I want to show you what it looked like. In fact, on the 4-hour chart, so we go daily, 4-hour, 15-minute chart, we had this action here. We came to this level, that was that daily level, and then we started to break down and even go below these little lows here on the 4-hour. And on the 15-minute chart, here's what it looked like. So we have, it was way up here. And look at coming into the day. Here's rollover. Here's the new day. What's this? A swing break. So prices going even lower. This is what we call the swing break set and forget pattern. And another, pretty healthy move down. I wish every day worked out like this, but they do. I mean, we get days like this, and then you get days where they don't work out or you have nothing going on. That's just trading, right? So that, and we just needed, and the point of this one here was that we just needed a volatility stop of about 10 pips. However, let me just zoom in here. If I bring this over to here, I want to show you something. If I sell here and use a natural stop, here's a naturally created swing by the market. My natural stop, the 10 pip volatility stop is also well above the natural stop. That's really nice. Now we have the best of both worlds. So it wouldn't have mattered which one you use in this case. And those are really nice because, if you're going to get stopped out of that, I mean, it's probably going to keep going up. Okay. Now, for the longer term trading approach that Darko teaches, which is basically, some swing trading, a little bit of position trading, mostly swing, it's the same as scalping as far as using higher time frame levels to key off of and then find one of our patterns to trade from. And that's an oversimplification because there's a full price analysis and all that, but it's the same technique, basically the same approach. But the stops that they use for longer term for swing trading are all natural stops. I'll just show you quickly. I just picked one up here so this is a 4-hour chart, and forget the top down. I just want to show you the point here. It doesn't really matter. If you're looking to buy down here, right, which you can see is a pretty good level, and this isn't a trade recommendation, okay, so please, I'm just showing you the technique here. If price comes down here, there'll be no volatility stop involved or anything like that. It'll be a natural stop, like here's a drop and then a rally. So you'd have a stop below this low right here. Just zoom that in a little bit here so you can see it. You put it just below. We put it a few pips below this low, or maybe this low here. So that's the idea behind using a natural stop, and that's what's used for swing trading. Okay, so those are the ways that we Those are the ways that we set our stops. And they are critically important for controlling losses, okay? Because at the end of the day, we're playing an odds game with the odds in our favor. But they are, after all, just odds, right? And there's going to be losing trades, which is totally fine. They should be expected, right? Get your expectations set properly. But if you have a sound trading plan, the idea of taking losses should never be fearful, okay? It shouldn't be feared. So I hope all of this makes sense and that you find it helpful. Let me know in the comments if you've had struggles with stop placements and if this was helpful. Okay, thanks so much. Okay, so again, stops are a super, super important part of your trading plan. So I would highly encourage you to use some form of a stop loss for protection against adverse move. Because the fact is we never know what price is going to do next, right? So a properly placed stop gives us protection and at the same time allows enough breathing room for a movement in a profitable direction for us. So there you go. Thank you so much, everyone. Be sure to hit the like button and subscribe to our channel so that you'll be notified whenever we put out a new video. Thanks again. Have a great weekend. Take care.